Hi, everyone, and welcome to the Amber Data Derivatives podcast. I'm here with Simon Ho, the founder of T3 Indexes. Simon, how are you?
I'm good. Thank you for having me.
Super happy to have you on. So, Simon, a lot of people might not know what T3 does and a little bit about your background, so maybe we could jump into that. But you also have a really extensive trading career in the vol space, so I'd love to explore that as well. So maybe if you just could give us a brief breakdown of T3, and then we'll jump into your background.
Absolutely. Thank you for having me. So, look, when I left university, I was kind of at a crossroad. I didn't know exactly what I wanted to do, but I found out I became a junior at JP Morgan in Sydney, and from that point on, I kind of never looked back. I mean, for me, options were and still are the best things ever. I challenge anyone who thinks there's something better than that. But no, I've always had an affinity for that, and I enjoy kind of the math side of things, but also much more, I suppose, on the trading side. So my career has basically been involved largely in FX and creating derivatives. And so I guess there's sort of two sections for that. So the first thing was learning about options, and it was extremely formative, and working for a firm like JP Morgan was absolutely fantastic because, there were many really smart people, a lot of things that you can do there that a lot of other places weren't able to do. So from that point of view, it gave me a fantastic grounding, and it was something that from now on until I no longer exist, this is something that is really interesting to me, and I've really enjoyed everything about it. So essentially. Starting off with trading, and then I was sort of dotted around the world. So I lived in New York for a while, Singapore, New York, London, then moved to Goldman Sachs, which is, quite a different regimen, I suppose, than JP Morgan. They're slightly different in terms of their outlook and so on. But still, my core interest was trading volatility, as you mentioned, and particularly at the beginning of my career was more focused on FX. Subsequent to that, that's when I wanted to start to reach out in different areas. So, for example, you may know that we've got a couple of indices in the crypto space, which I know is a love of yours, and that sort of stuff really floats my boat. It's fantastic because if you can make new derivatives for people, it just multiplies the opportunities that may be available. So, I'll give you the opportunity.
Yeah, that's super interesting. And just jumping back real quick, so when you were at Goldman and JP Morgan, and I think Deutsche Bank as well, were you trading like prop, or was it kind of on a principal basis? And was it like exotic derivatives or listed markets? How did that look like?
Yeah, so most of it was OTC in FX at the beginning, especially. So we did some really fantastic things there. There are some trades that I don't think there haven't been as many done as these as I think that it should. But basically, the one thing that really sticks in my mind, fairly young, I was in Singapore at that time, so I'd been probably in the market, say, 4 years or so, and we did we had the central bank of Singapore came in and asked for a price in an option, and it was a knockout option. Now, a lot of people have heard about those and can price them up and whatever, but this thing was massive. And so the ability to rein it in and to make sure that I didn't blow up, for example, was palpable. Like it was a huge position, and we got right down to the wire. So thankfully, it worked out okay for me. I'm still here. So, but that was one of the most formative and most interesting, but also heart-wrenching things as well, because it was a humongous position that was done by what's called GIC, which is a very big player in Singapore, essentially a government thing. And so the fact that we could do that and we lived to tell the tale was awesome.
Wow,
it could easily have gone the wrong way.
Yeah, that's interesting. And just for my understanding and the listeners as well, so a knockout option, let's say I'm like a buyer of a call knockout. I want the price to rally, but I don't want it to rally past the knockout price. Otherwise, It goes to zero type of deal.
Exactly.
And so I assume that it went straight to that knockout price, and then you guys, is that how it kind of worked out? You guys didn't have to uh, paid a premium
Well,
essentially?
no, it was a little bit. It was. So how can I say this? It happened a little bit better than I had anticipated
Mm.
because if if it had been that it was knocked out straight away, then there would be a massive delta hedge that I would have had to have
Oh, I see.
laid on. So that was really the nail biting stuff. Like, and at the very end, it got really close to not going my way. So it was one of those things where it could have been a train wreck. As it turned out, it was not. And so the process of managing that though was at some point frightening because the size of the position is huge, but also it's very difficult because it's a discontinuity. So it literally goes from either 1 to 0 or vice versa, and that that made things very difficult, and it could have gone either way. But we managed it gradually, incrementally, as we wound down the time, and thankfully we did an okay job. So, and I'm still here. So that's good.
That's fantastic. Yeah, that's really interesting. So you've learned how to basically price exotics, price regular options. And so did this kind of background and insights into pricing and the math behind options essentially inspire you to found T3? Is that kind of the idea?
Yeah, absolutely. So the very first thing that I wanted to do was I was enamored with the CBEO VIX, which you will never hear me say that now, obviously, because I ended up creating the corollary to that. So we think, well, ours is demonstrable. It's called Spikes. It's a competitor to VIX. It's been around for several years. We are starting to gain traction, as you can imagine, with something that is so well known like VIX. It's very difficult to dislodge, the incumbent, and that's for any industry, I think, but in particular here. So well, at least if you look at the specs of it, ours is better, tighter, faster, cheaper. And so there's a lot of reason why someone might want to look at that and compare it to VIX and to see, which is better. So I wanted to do that because I thought, there are certain imperfections that I think we can remedy, and we managed to do that, which is why I can say better, tighter, faster, and so on. So no doubt, though, I mean, a lot of your viewers will obviously be very comfortable with VIX, but over time, I have a feeling that people will move to Spikes, or at least be on par, because there are a lot of features about it that are interesting. They're also they're very similar as well to one another. So from that point of view, there are a couple of things that are slightly differentiated, but essentially we're talking about something that is effectively 99.9% correlated to one another. So.
Yeah,
Very similar.
interesting. And one of the really cool things about Spikes is that instead of VIX being built on top of SPX options, you guys are using SPY options. So you're using that
Yes.
SPY, the SP 500 ETF, which is what retail traders or basically everyone's familiar with. So that's a kind of a really interesting insight. How did you guys come up to use SPY as opposed to uh, an index such as SPX?
Yeah, so well, SPX is not something. Well, that's a proprietary product, right? So only CBO can do that. So we had to try and find another one. Like, thankfully for us, SPY is kind of the most liquid thing on planet Earth, pretty much. And so we thought, well, this is a no-brainer that this will be able to give us the same kind of properties that you use in VIX. So from that point of view. We were quite fortunate, I suppose, but it was a very arduous process for us, because the regulator wasn't quite sure, and that kind of stuff, and so it took some time for them to approve it. Thankfully, they did, and now basically there is competition in that particular space, which is the whole idea of doing this in the first place. But we also since then we also wanted to expand the product set. So if you go, you can go to a place called T3 Index, which is the index that is the page that I have. You'll see we've got all sorts of different things in there, from skew indices for in the crypto world, but also in spikes. So there's a lot that we've been able to do, I think, that investors could use, to help them in working out what it is that they want to expose themselves to.
Yeah, that's fantastic. And then you guys essentially listed Spikes initially on MIAX, the Miami exchange. Is that right? And is it on other
Yes.
exchanges as well?
It's still on the MIAX exchange. We are definitely starting to get, as I mentioned, one of the difficulties is when you have an incumbent, it's very difficult to dislodge them. It's a bit like the Pepsi and the Coke scenario. But anyway, I think we're making really good progress, and so on at least on that side of things. We were thinking of going to do a perpetual because
Oh, interesting.
that's something I think would be pretty cool to do a spikes perpetual. Obviously, we want to make sure that spikes is everywhere it needs to be before we do that. But yeah, it's something that I think would be a nice adjunct to the toolkit that we could have for
Yeah,
doing
that's
it.
fantastic. And maybe if you could just give us a couple insights around sort of the business model of an index provider such as T3 without giving away any secret sauce. So, one question that comes to mind is like crypto, where there's a lot of different exchanges, there's a lot of different exchanges that trade SPY options. Do you guys connect to all the different exchanges and pipe in data all from various places, or is there sort of a main source of truth? How does that kind of work out?
Well, when you look at the underlying thing, which is SPY, and that's super, super liquid.
Hmm.
So from that point of view, we're very fortunate. We've got something that, as I mentioned, is probably the most liquid thing in US markets. So from that point of view, it made it relatively easy because there is so much liquidity underneath. And so therefore, you can construct these things with a great deal of confidence that you're doing it right, because there's nowhere that you can do it better than that. Using the underlying of SPY, it can't really be beaten.
Yeah, that's interesting. And then you guys have actually built a few other indexes. So I know BitVol, the Bitcoin Volatility Index. I think you guys
Yes.
have also done a Bitcoin Skew Index. Is that right?
Yes, correct. Yep.
And then you've also gone into sort of the more exotic markets that a lot of people don't think about. So you have the Milkshake Index, which is a milk ball index. Is that right?
Yes, that's right. Yeah, that's funny that you know that. To be honest with you, I'm very impressed. So yeah, that was through our so-called cousins in New Zealand. They're a big producer of milk, and so
Hmm.
I had a friend of mine who worked over there on the exchange, and I said, "Oh, why don't we do that?" Now I know that the CME, I think they have a milk futures as well,
Oh,
but
interesting.
in this case here, they're friends of mine, and I said, well, why don't you do that? Because it'll give you more prominence. It'll give you some, the fact people don't know a lot about milk trading. Obviously, right?
Right?
It's not your usual thing, despite the fact that the CME has it. But yeah, I just thought, well, they have a bit of a booming business in milk supply, and so we put an index together for them. So
That's really
yeah.
interesting. That kind of leads me to another thought. So, I guess agriculture is a big sort of underlying reason for futures markets. And I imagine sort of the futures markets in Australia, New Zealand, and the US might be a little bit different just because of different agricultural markets. But we've seen a lot of DeFi, successful DeFi projects come out of Australia, a lot of great traders come out of Australia. How do you view sort of the Australian trading industry and prop industry compared to say the U.S. and New Zealand? And is there any kind of different products that stand out to you?
Right. So the first one I guess we'll tackle is the milk one in New Zealand, and I think that they're good at what they do, but New Zealand is very, very small,
Mm,
and but they do sort of export a lot of this milk, especially to Asia, so
mm,
seeing places like Singapore and that kind of thing. So, but it is. The reality is that they can't scale, because New Zealand is relatively small, and the markets they obviously have export markets. That's how they make their bread and butter. But yeah, so I think it's going to be slightly different. I consider that they're almost too small. Like if you could swamp that, if you had people who really wanted to come in and do some trading and options and so on, it's
mm,
just a bit more difficult because you then need market makers for options. You need to be the people need to know a lot about options, which is sometimes a little bit more difficult. They are at the extremity of the world, so that makes it a bit of a hurdle for them to do that. Australia is a little bit different in that we're a much bigger land mass and more people here, and so I guess it's more synced into places like Europe and the US in
mm.
particular. So I think Yeah, I mean, it's pretty good. They've got a good niche thing going, and don't get me wrong. I mean, they sell a lot of milk, and so that's one of their main products that they create, but less so on the derivative side. So I put that together because I thought it would be kind of nice to have it. But yeah, it's more of a gimmick than anything else, but it served its purpose.
Yeah, that's really interesting. So recently in the markets, we've seen the development of zero DTEs or 0 days till expiration options, which has sort of seemed to be all the rage lately. Do you have any
Yep.
thoughts on that? And especially as an index provider, is there a zero DTE spikes index coming out or anything like that?
I can say unequivocally, certainly not. That's my position on it. So yeah, so a few people have asked me that question, and I think that yeah, look, I'm not actually a fan of it. I think
Mm,
we've got a plethora of different tools that one can use, specifically, and also extremely liquid, which is important. So if you're a trader, the first thing you want to know is how much liquidity is there. What can I do? If it's too small, then it's just a waste of time, etc. So I think that the I may be a fuddy-duddy because I'm no longer a young spry. I just reckon that I do not think that that's going to be a long-lasting product. Now, you'll probably get a lot of people trying to throw tins at me or whatever at the moment, but that's my feeling. And yeah, I don't think it's going to be a long-run winner.
yeah, interesting. I was talking to a mutual friend of ours, Mark Sebastian, and he has the suspicion that we might get some sort of like portfolio insurance type crash that we saw in '87, just because of some sort of momentum that if there's too much open interest or too much positioning in zero TTEs and everyone kind of gamma delta hedges on the way down and your gamma explodes in your face and then things could just crash. Do you think that's a possibility? I know that's been a big point of debate.
Yeah, I do actually. That's
Mm,
part of the reason why I'm not really jumping into it because I think that look, it's unlikely, but I think it could wreak a bit of havoc because I just don't think there's going to be enough. If something happens for a contract of that size, in which case you most likely included, retail folks,
hmm
I think it could be a potential disaster. If something bad happened during the day, people might not be as alert.
mm,
If you're not a seasoned trader, you're not looking at your screens all the time. Maybe something could get away with from them. So I'm not a fan. I know that I'm going to be labelled as a fuddy duddy by many people, but I just don't see the utility. But I could see some, as you mentioned. I think that there's the possibility for some havoc potentially if and when something went precipitously badly.
yeah, yeah, that makes sense. So jumping back to the crypto side, so BitVol, you guys were working pretty closely with LedgerX. I imagine you still are. I
Yes.
know LedgerX and the FTX debacle kind of put pause on stuff, but we'll see where that goes. And then you guys did one of the first OTC trades, if not the first OTC trade, on Bitcoin Volatility Index. Is that right?
Yes, that's correct. Yeah. So that was really cool. We had a few, I think it was about three different pension plans that were on the west coast of the US.
Mm,
And for whatever reason, and bless them, they were willing to sort of put their toe in the water. It wasn't a humongous trade, but nevertheless, as you mentioned, it was the first ever BitVol and ETHVol contracts ever traded, which is cool. Obviously, I would like it if it would continue to grow,
hmm
but nevertheless, look, I think it will over time. And whilst we've had this bump with this whole FTX thing and whatever, as we mentioned at the beginning of the podcast here, it's still around, and I don't think it's going anywhere from here. So, and look, I'm fairly bullish on the whole thing, and I think that it will become more of a thing, especially because now it's becoming more regulated. I think that will lead to more people having confidence in trading it. So, the guys who are out there first, they might say, oh, well, that's not the way it should be, blah, blah. But I just think that you have to be reasonable, and you want to make sure that you're delivering a product to people that it has both utility, but also has liquidity. And so in some of these other cases, that wasn't the case. But yeah, I was Yeah, so LedgerX were the people who were facilitating the trades on our behalf. We had a few, as I mentioned, there were some West Coast people, but there was also some Australians that were involved in trading that as well, which was pretty cool.
Cool. Yeah, there's a couple big firms out of Australia in the crypto markets. Acuna jumps to my mind. They're very
Yes,
present in
yeah.
this space. So one of the things that we saw during the SVB banking crisis back in March of this year is that we saw the stablecoin break its peg for USDC. And so when I look at an options exchange such as Bybit, which does Bitcoin options settled in USDC, versus Deribit, which is coin settled, so the options are cash settled in Bitcoin coin itself, we saw a big
Right.
dislocation in sort of the volatility of both pairs because of the underlying sort of the quote pair essentially breaking. What do you make of that? And if you're looking at like a volatility index, is there something to be said between the volatility of these two products side by side being different, or some sort of additional risk in one versus the other?
Um, on that, the last point you mentioned there, I'm probably not as qualified for that. One of the things that we were doing is that we were doing a TWAP at the end of the life cycle, so that everybody could get out at the same price or whatever. That's how many of those indices are done, and so that's the way we did it with our over-the-counter stuff. So I basically took the playbook that I was already comfortable with, simply because I was comfortable with it. I've been doing that kind of stuff for years, and so I know what it looks like. So for us, doing a settlement auction, I think, is really important, and maybe that may have helped in that circumstance. But then you have to have confidence that it is being done properly. In our case, it was, and so yeah, I that's the way I would approach it. It's probably a little bit like an old school as opposed to more crypto style of things. But at the end of the day, you've got to find a closing price, and you need to do that in an orderly manner and in a way that everybody understands and says, well, that's fair. That's the way it should be. And then you have the ability to create a platform which is recognized and can do the job. Because if you can't, then of course the next time someone wants to try it, everyone's going to say, well, look, that's just, it's not good enough. The procedures aren't good, or the settlement could be manipulated, all that kind of stuff. So that's one of the
Yeah.
most important pieces, I think, in the entire creation process when it comes to creating a new derivative.
Yeah, that's really interesting. And on your guys' BitVol index, do you source data from Deribit only or multiple exchanges? Like, how is the index composed? Like, what are the underlying sources?
Yeah, so it's multiple. I mean, I felt like, if I just took one, then if anything happened in that particular thing, then the whole thing would be dead, and so would my credibility. So yeah, I think you need to look. There aren't that many of them, but yes, you have to try and do as much as you can to make sure that it's robust and passes the tests, so to
Cool.
speak.
So, kind of wrapping up here, usually I like to ask a few kind of more insightful to you questions. So, one of the things is, as you were learning about options, were there any formative books that you would recommend to listeners that really helped you along your journey?
Yeah, well, funny that you say that, because I saw a podcast, I think it was with you and with our friend here, Ewan Sinclair. So I'm pretty sure you're on that. So yeah, so I find that to be a fantastic book. He's obviously super bright fellow. So yeah, that's one of my favorite market books, I suppose. Yeah.
The Volatility Trading by Ewan Sinclair. Yeah, I would say that's probably one of my favorite ones too. Not his favorite, but one of mine as well. So that's great. And when you're not running T3, is there anything you like to do outside of work?
Well, that's a good question. Yeah, so I I try to do a lot with projects to sort of protect Australian wildlife and
Oh,
stuff like that.
cool.
So that's quite interesting to me. So that's something I like to do outside of things. So, for example, we last year we launched 2 ETFs, and the notion with that is that at the end of the year we're going to donate 5% of whatever that ETF made and give that to the people who look after, the native animals and that kind of stuff. So
Cool.
that's sort of something that I'm pretty keen on. So, for example, I mean, it's just weird, like, koala bears, for example, they're super cute and blah, blah, blah. But, they're under a great deal of threat. So we thought, well, why don't we do that? It's not really ESG. It was more like, let's do what we can to raise some money by doing this product and using that money to help the, fauna and flora in the country. So
Yeah, absolutely. Well, I'll have to come out to Australia sometime. It's definitely on my bucket list. And I know you guys have some pretty crazy looking spiders out there as well, so I want to check those out too.
They're not that bad. It's all right.
Well, Simon, thank you.
But we'd love.
Oh, good.
Sorry, I was going to say we'd love to have you down here anytime.
Yeah, absolutely. I'll definitely make sure to do that. Well, Simon, thank you so much for coming on. I really appreciate it. I think our listeners learned a lot. And everyone who tuned in, thank you, and we'll see you next time.
Thank you.
Absolutely.
Thanks very much.